Hello again, everybody. How are you doing? I hope everybody is doing great. I hope you had a wonderful day in the market since we said goodbye yesterday, and that now you are ready for more excitement and more action, more opportunities in the market. So, first of all, welcome. Thank you for being here, everybody. And of course, we're going to do the same thing that we have been doing for the past few days. That is, of course, trying to find the best opportunities in the market for you. Yesterday was a boring day, unfortunately, because only one of the signals we have issued, of course, we issued a good number of signals, I think 10. We had 10 signals issued, but unfortunately, guys, only one of them was triggered. So I was all day just, following this one trade. And of course, you know me, by the end of, or the closing of the European session, I canceled all the orders that were not triggered. So I'm going to show you, before we start, what I want to show you is yesterday orders. And that is, of course, these are the orders which we placed yesterday. Of course, we had many orders. We had orders on the euro dollar, euro yen, on gold, on the yen, and on the pound. We had 2 orders on each of these instruments, which of course totals to 10 orders. All of these orders were canceled, but we had one order that made it through to the real market, and it was the long order for the pound, and it reached its modest limit. Of course, I used the target one for the limit yesterday. It was only 44 pips. It was easy for the pound to get those 44 pips. So congrats on this profit, but it's actually we are hoping for more. When you have only one trade in 24 hours, I don't know about you, but to me that is a really boring day. Nevertheless, it is profit. So of course I'm happy because we made profit yesterday. If it was a loss of 44 pips, I will not be happy even if we had only one trade. So guys, before we start, I want, of course, first of all, to give a huge thank you to our sponsor, QTime FX, our favorite broker in the whole world, who is offering you fantastic trading conditions, guys. This live stream, as you know by now, of course, if you are returning, this live stream is sponsored by QTime FX, a broker who really cares about you. And that shows, of course, first of all, in these webinars. Because QTime FX wants you to make money. They want you to see opportunities in the market like the one we made 44 pips with yesterday and more, of course. We hope for more today. We hope for more than one trade to be in the market. And that is what makes them happy. They want their traders, their clients to make money in this market. That's why they got me, a chartered market technician with 19 years of experience, to give you my opinion about the market so you guys can make money. This is how much QTime FX cares about you. And they are offering you a maximum leverage of 500 to 1. And it was not a surprise at all to see them winning the award for the lowest Forex spread broker of 2018 by the ACIFMA, because just look at these spreads, guys. How many brokers can beat that? I know that it's very, very hard to break this unbelievable spread that they are offering you. Imagine yourself trading the euro dollar and the dollar yen with less than half a pip. Imagine that, guys, and other majors, other instruments with similar spreads. Now, of course, if you look around, you will see many brokers offering you spreads that are less than 1 pip, less than half a pip, but they are charging you commissions because they say, well, we are providing you with a professional service, we deserve some commission. Yeah, well, maybe they do. Of course they do. But when they charge a commission, that means you cannot really make use of this fantastic spread that you should be using. But with QTime FX, we don't do things like that. No, 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 no. We offer you these fantastic spreads, and we are not asking for commission instead of the spread that we would have been charging you, which is, of course, more than the numbers you see on the screen. And to make you feel safe about your funds, QTime FX keeps their client funds segregated in UOB, which was ranked in the 22nd place in the world, guys, in World Bank rankings. So it's one of the top banks in the whole world, 22nd place. That is very, very impressive. And to top that, we are having a promotion now that can give you up to $500 in bonus. Open a VIP account with QTime FX with a minimum deposit of $150, and you will get a bonus of $250 or $500. When you deposit $150, you are entitled to a bonus of $250. And when you make a deposit of $300, you are entitled to a fantastic bonus of $500, guys. But to get these promotional benefits, you must contact us at FX Educast. So our Telegram account is FX_Educast. Please use this account in order to get these promotional benefits. When you go through us, we are giving you these promotional benefits. And we also have a WhatsApp number, 82 10 84 81 36 35. I'm going to repeat that. It's going to be in the chat, of course. The guys from FX Educast, my favorite team in the whole world, is there to give you details. And of course, they are giving you details. They are giving you everything you need to know. And if you have any questions, please shoot them on the chat. They are a fantastic team, very friendly, yet very professional. So they're going to answer your questions with smiles on their faces. And if you need any kind of help in the account opening process, we are going to help you. So guys, there is no reason at all not to choose QTime FX through FX Educast. We are giving you fantastic trading conditions, and we want you to use them to your favor. Okay, guys? So first of all, before I start, I just want to update the chat link. Of course, I have to in order to see what you guys are talking about. I want to be a part of it. If you have any questions, if you have any requests at all, and it is working. So now we can go to the charts. Fantastic. Okay, my brothers and sisters, my fellow traders, my tribe, my team, I am very happy to be with you for another day, another webinar. Yesterday we made a small profit, but of course it's good, 44 pips. If we do this every day, that would be fantastic. So we are going to try and do the same thing again today. The reason we did not hit many orders yesterday, we placed 10 orders and only one of them turned into a real position, was of course that the market did not move much on most of the instruments, especially, for example, the euro. For the euro, we dropped a little bit, but we were unable to trigger the buy or the sell. So we are probably still have to wait. We will have to wait for more evidence on the chart before we can establish a position on the euro. These are important levels, yet they are risky levels. Why? Of course, because now we have approached a very important support. It was 109.88. We talked about this all week, and it was under the spotlight. And yesterday, look what happened here, guys. We dropped to what was the low. Let me see, to be exact, it was 90. So it was only 2 pips above our support, guys. And that is saying something, right? Before I continue, I want to say hi to Edith. Edith, hello. I have never seen this name on the chat before, so I think we have a new viewer here. Welcome, welcome. But I do recognize Nick, of course. Nick, how are you, buddy? How's everything? I hope you had a good day yesterday and you made those pips on the pound with our signal, our only signal which was triggered yesterday. I really hope you did. And today we are hoping for the best. So thank you for being here, Edit, Nick, everybody who's watching. If you engage in the chat, I'm going to answer any question you may have with a big smile on my face. This is my promise to you. So guys, this is where the euro is currently. This is where the euro is currently trading. It is just a little bit above the $1.10 landmark, and just a little bit, of course, above our support, our very important support, 109.88. We're going to continue to depend on 109.88. To tell you the truth, I don't like how deep we have dropped in this move to the downside, because now, I'm sorry guys, I'm going to change something and I don't think you're going to like it. Okay, I will try to make it up to you, but here I don't think you're going to like what I will put here on the chart. Yeah. Wait, let me see. Maybe this is better like this. Yeah. Yeah, guys. So, of course, for the past few days, I have introduced these 5 waves to the upside. Obvious, very obvious. Even the inside structure, the internal structure, the sub waves, they confirm a 5 wave sequence to the upside. Especially, for example, with this wave 4 terminating very close to the bottom of wave 4 of 1 lesser degree. One of the best guidelines that Elliott wave has. And with the 5 up, we assume that this is an ABC to the downside. Of course, when you have a 5 wave sequence pointing in one direction, that means this is the direction that is expected in the market after, of course, a correction of 3 waves. So we had, let's say, an ABC to the downside with this, and the internal structure of wave C was very encouraging. But don't forget that wave C is a 3rd wave, and it shares a lot of the features of the of wave 3. And in our case, it was strong. It was almost extended, we can say, and it developed with 5 waves to the downside, and that is why that happened very close to the 88.6 retracement level. We completed these 5 waves to the downside, and then we started recovering, and that's why we were very excited about this recovery. But of course, we noticed this trend line, or this horizontal line, is on the chart since yesterday, since even the day before that, since Tuesday, and we noticed that in the 20s, the bulls just give up here. The high is 25. It is 25 here, and it's 25.6 here. So it was very obvious, guys, that we have something around 25. And without breaking that, we did not recommend a long position on the euro. That's why I placed my long recommendation on the euro yesterday here, above 25. Of course, we did not reach that. The order was not triggered. It was canceled. We were, of course, right about not buying the euro before breaking 25, because after that, we can see weakness to the downside. This weakness is limited, of course. This is not a lot of movement, but it is to the downside. Now, what we need to specify is where we can start believing in a move to the upside. But the bad news, before I turn to that, is that now with this last part we have a 5-wave sequence to the downside, and that is not good. That is not good, guys, unless it is a C, and honestly it's very hard to count this as a C. I'm gonna use another chart, maybe here. Want to keep that count, keep everything as is. These are, of course, the notes from yesterday. Can you see this? And I think we had the same support or resistance all this week. 988 and 1025. These are the recommendations for yesterday. Of course, they were not triggered. That's why I'm gonna cancel. I did cancel them. I'm gonna delete these off the chart. So, guys, it is very, very hard to count this as a C. That, of course, would have to require a whole new wave count, which is not very encouraging, to tell you the truth, but we're going to try and see. Okay, so this could be counted as a 5-wave sequence to the upside, with a failure, as Elliott called it, of wave 5 to go beyond wave 3. This can happen when wave 3 is really strong. And as you can see here, wave 3, of course, compared to wave 1, for example, and wave 5, it is really, really strong. It's more than double wave 1 and wave 5. So when this thing happens, when you see a very strong wave 3 compared to waves 1 and 5, sometimes wave 5 fail to go beyond the top of wave 3. Elliott called this a failure. He used this term, and he said that it is something that happens in the market. And of course it does happen. Now, we can count this as a failed 5. I'm not really encouraged to do so, but we are giving the benefit of the doubt to the bulls here for 1 day. I'm not going to wait for a long time. This does not look right at all, to tell you the truth. So if we had this as a wave A, it will be very hard for wave C not to go beyond the bottom of wave A, but they are finding support very close to each other. The end point of wave A, the end point of wave C in this count are very, very close to each other. And the most important thing, this is what I really, really care about. It's not the wave count, guys. What I really care about is that all of this is happening very, very close to our favorite support of all. You remember this from last week, 109.95. It is absolutely my favorite support now, and it was for the past few weeks. We expected a visit there. We got our visit there. This is the first time we got to 1995. We recovered, and again, we are now currently trading at 1995, or at least we touched it, and we are trying to recover from that level. We still are, less than 20 pips above that level, so we are not really far, but we can start recovering from this level. So that is why my support for today is going to continue to be 109.95, and of course we had a wave count yesterday that starts at 109.88, which is only 7 pips. So it is very obvious that we have strong levels in these areas. We have support at 109.95 and 109.88, and of course, when they are 7 pips apart, we can use them as one area, and we can say we have a support between 109.88 and 109.95. Okay, guys, so this is going to be our support for one more day. Not a lot of change. Of course, when you look at this chart, when we were looking at the chart before, we can see that 25 is causing problems. The 20s here are causing problems. I want to connect the tops of the two 4 waves here and see where that is pointing. Maybe we can start believing in the euro before we break above 25. This trend line is currently running around 20. So I'm going to use 20 as my resistance for today. For the time being, next hour it's going to be maybe 19. In a few hours, American session, maybe it's going to be 17 or something. So we are going to count on this trend line here for resistance, while we, of course, hold our favorite support area very, very dearly. So resistance is going to be 20. 5 pips below yesterday. $10.20. And with this, we are going to build our trading strategy for today. If we start recovering and if we break this trend line to the upside, that means we are probably going to trade above the tops of wave 4 in the 5-wave sequence to the downside, and wave 4 of one lesser degree, wave 4 within wave 3, and that would be fantastic. So once we start trading above this trend line, watch out for these 25 here and 32 here to be tested. And of course, after that, we're going to expect the euro to move higher and higher. But without breaking above this trend line, guys, I don't believe we have a reason to buy, even though we have touched or came extremely close to our support 109.88. So let's go. Let's start building strategy, hoping that today the euro orders will create some action for us, because yesterday we were just sitting there, watching the euro. Come on, do something, make a move, and the euro is just, it's like a lazy guy sitting there watching Netflix, eating chips, and he just doesn't want to do anything at all. That is the euro. That is how I pictured the euro yesterday. But today I'm really hoping for some action. I'm really waiting for that. It cannot go on like this, guys. We need something to trade. We want to see action in the market. So euro, please trigger one of our orders today. We're going to place a buy above 10.20, and in my opinion, I'm going to use only 5 pips, guys. Yeah, recent price movements have been extremely boring. So even the smallest moves above support or resistance will be considered, especially resistance. Why? Because we have touched a very important support at 109.88, came very close to it. Of course, it is. We have 109.95 in the area as well. So with these two levels very close to each other, we can justify rooting for the bulls, not for the bears. And I'm going to translate that into a trading strategy that is going to require only 5 pips above the resistance, while we are not going to use 5 pips below the support. We are going to require more than that before we can initiate a short position. So a buy at 10.25, guys. My stop is going to be 20 pips below 109.88. 109.68. How about that? 57 pips. Yeah, fantastic. I like that very much. Okay, now let me look for targets for you guys. Initial target, of course, is going to be modest, something between 30, 35, 40, 45, 50 pips, something like that. And on the second target, I'm going to use 1183, which is the high that we have seen almost 40 days ago on October 18th. It was a Friday, if you remember. The market rushed to this high in the final minutes before it closed on October 18th. So since then, unfortunately, we have touched this high. We have been unable to challenge it again. But if we start rising, I am definite that we will challenge this high. But of course, not before we break some resistance levels. So show me that you are capable of breaking resistance levels, you lazy pair, and then I will believe that you can go to 1183. Now, what about target one? What do you think, guys? Okay, for target one, I'm going to use more than one technique to specify what target we should expect in order we break above this falling trend line here. So one of my techniques is, of course, retracement levels. You know me, you know how much I love my retracements. I'm sure you do. I'm going to use these 4 retracements and see which one of them is going to be attracting us more, which one looks better than the others. 66 here, not bad at all, but because of this penetration, maybe we can get higher. So the high of wave 2 is 88, while the 88.6 level is at 85. So I'm going to use 85. Actually, I want something less than that. I don't want to be pushing 60 pips here. What about 74 here? Yeah. And to make it around 50, we're going to use 75. That is the 78.6 retracement level for the whole 5 sequence to the downside, which also is not very far from the top of wave 2. So this is our first recommendation for today for the euro. Sorry, it should be in blue. You know my color codes by now, right, guys? And I'm gonna write another recommendation on the chart. Of course, if we break below 109.88, then we should short the euro. Munther, what are you talking about? You have been a euro bull for weeks now, and you are expecting some kind of reaction to the upside. Why are you telling us to short? Well, guys, it's not me who is telling you to short. It is the chart, it is the market, and you should follow the market. Some traders, they take a position, a mental position, not a real position, a mental position, some bias against a currency or with a currency, and they start rooting for it. And of course, we are human beings. We want to cheer for something. We want to see something win over another thing. That's why we follow sports. We in everything, we make it like a competition, especially us males, of course. You know, if you know, if you know your evolution, your science, you know that is something that males, it's just built in, you know, the competition. So we like the competition. We want to be rooting for the euro against the dollar, for example, or the dollar against the euro. Some of you like this currency, some of you like that currency. But we cannot let this bias or this natural tendency to like one team more than the other to dictate our trading decisions. We need the market to move. We need the price action to help us understand the chances of moving higher or lower. So in this case, guys, I am definitely a euro bull as long as we are above 109.88. But if you just listen to that again, you would realize that that definitely means if 109.88 is broken, then I'm no longer a bull. Why would I be on the side of something that is failing to hold support? I'm not gonna root for the euro if it breaks 109.88. I'm not married to it. So of course I can switch at any time, and I can pick the dollar, and I will pick the dollar in case we break 109.88 because it's an important support. And once we break that, the chances of moving to the downside will become much, much larger. That's why I will place this order on my account today. It is against my expectations, against my view, but it is solid 100% solid, 100% justified from a technical analysis point of view. So I'm gonna sell, sorry, not at 88, at 68, 20 pips below the support. And I'm gonna have my stop just above that trend line we have been talking about, which means, of course, 1025. And now targets, I'm gonna show you our targets. I'm going to use the same targets from yesterday, but I'm going to show you why they are important. So first of all, we do have support here. Maybe I would, or I will have to turn this to an hourly chart to show you why 109.03 is an important support. This is it, guys. This is the support that I really like after, in case of breaking below 109.88. Of course, as long as we are trading above 109.88, I'm not going to be thinking about this level. But once we start trading below 109.88 with a good number of pips, not 3 or 4 or 5 pips, I have chosen 20 for today, 20 pips above, below my support, and I will start immediately thinking about this level. I will say to myself, now we're going to 109.03. I love this support. It has provided very good support here, again here, intraday resistance here and here, just a little bit, and I like how it looks. So I'm going to use 109.03 as my initial target. As for the second target, it's going to be I think even the daily will not show the second target. We need to use the weekly chart. Why is that? Because we have not been trading in these areas for a very, very long time, guys. So the last time, of course, in October, we have reached the bottom of this drop, but before that, we have not traded in these areas since 2017, since May 2017. 2.5 years, guys, and now we're back. So the second target is going to be this retracement level. Okay, guys, 78.6 for the whole rising move from the 2016 annual low to the 2018 annual high. This Fibonacci level here, I want to show you which one it is in specific. This is going to be our second target, 108.14. Okay, so that's why I'm going to use 109.03 as my initial target and 108.14 as my second target. This is the recommendations. These are the recommendations I'm going to go with for today, guys. A long at 10.25, a short at 9.68, and I'm going to go immediately to my QTimeFX live account, and I'm going to place these orders, hoping that not like yesterday. When Europe closed, I canceled them. Today, I really hope that we're not going to be canceling them. I really hope that we are going to enjoy some kind of profit on either of them. I don't care if the market is going down, I'm ready to make profit. If the market is going up, I'm ready to make profit. So I will need the market to move in one direction for the next 24 hours. And I really hope it's up, but I have no problem if it's down. I will have 2 orders ready to take advantage. That's why I'm gonna buy stop at 10.25 with a stop at 109.68, and I think we said 75, 10.75, right, guys? We're gonna check again on the charts. Yes, buy at 10.25, stop 9.68, and target at 10.75. These are the numbers. Take a look at them. Go ahead straight to your QTimeFX live account and place these orders on your real account with us so you can start making money. And place. And there you go, our first recommendation for today, guys. Buy euro at 10.25, stop loss 9.68, take profit 10.75. Keep your fingers crossed. I really hope that this recommendation in specific is going to get to the target. I really hope so. Now, of course, if the market goes against our expectations, if it breaks the support, breaking an important support is a reason to sell. If that happens, short positions will become justified, 100% justified. That's why I'm going to sell. Of course, it's a stop, sorry, not a limit. I'm going to sell at 109.68 with a stop just above that trend line we have been talking about, 10.25, and a limit at 109.03, the support that I have just shown you on the chart. And please, there you go, guys. This is the second recommendation for today. Sell the euro at 109.68, stop loss at 10.25, and take profit at 109.03. And of course, guys, we are going to keep these two orders on the euro. We're going to keep them in our accounts until the close of the European session, which is around how many hours from now? A little less than 10 hours. Okay, so when that happens, when the European session is closed, we go back to our trading account. If we have orders that are now in the market, positions in the market, we need to keep an eye on them, hoping for the best. But when we look at our accounts by the European session closed, and we see we still have orders that were not triggered, we cancel them. Okay, so guys, these recommendations, all of them are valid until the close of the European session. Okay, people, I like that very much. We are in a situation to use the euro if it decides to go higher or lower. Now, let's go to our next instrument. Gold, what do you think, guys? Or maybe the pound? Let's talk about the pound first. I'm keeping gold and oil for the second hour. I'm going to call it the commodity hour. Okay? Okay, guys. So I just want to look for the chart where I have the analysis from yesterday. Yes, guys, this is it. This is the only recommendation which got triggered yesterday, long at 28.69 with the target at 29.13 and a stop at 27.94. Of course, we got to the limit easily. We are currently around 30 pips above that. So our limit was here. We wanted the price to retest this top here, and it did, and it broke above it. Maybe in retrospect, of course, it's easy in retrospect, since this is, of course, at a retracement level, maybe it was better for us to place our limit at the next retracement level, which would have made us around 13 pips more. But it's okay. We made profit. It was a good recommendation. This recommendation to short at 27.94, of course, it was not touched. Now, what is next, guys? What's next for the pound? As you can see, we have been recovering in a strong manner recently, more than 100 pips above yesterday low. Yesterday, 24 hours ago, we were trading here, guys. Exactly 24 hours ago. This is the candle from exactly 24 hours ago. The low was 28.25 during the agent session, and again in this hour we have the same high, 29.51. Of course, with approaching 29.51, we cannot help but remember that we do have an important resistance just about that. Gonna show you. Maybe we need the daily chart to see it. And it is yes, it is, guys. let me remove all drawing tools. It is this resistance which I am really, really interested in. Guys, we do have a good number of retracement levels, and of course everybody has their own favorite retracement level. A lot of people agree on the importance of the 50%. The 50% is one of the strongest, most important retracement levels you can use. But to me, of course I believe that 50% is a fantastic level, just as the 61.8, and again, just as the 71.4. This is my own retracement level. I have discovered this level. I did not read about it anywhere, and I'm very proud of that. Maybe I'll put it in a book and write a book about it. What do you think about that, guys? So the 71.4 retracement level is at 29.75, and as you can see, guys, I have said this yesterday, we have been facing very strong resistance around this level. Once we tried to really push beyond it, we got to 30.13, but all other attempts stopped extremely close to this level. For example, here, the daily high on October 31st was 76. November 1st, 73. November 18th, 10 days ago, 85. November 19th, the next day, 70. Again here, 70. And we are now getting closer to this level again, guys. So without a shadow of a doubt, 29.75 is going to be our resistance. $29, not 28. 29.75. And I'm sure, guys, you can tell by the way I'm talking that it's still 8 a.m. here. I'm just trying, to get in the mood of trading, working, talking to you guys. It is a little bit early, and it's getting colder in the mornings here. Now winter is getting closer and closer, and it makes me even more lazy than usual in the mornings when it's cold. I'm sure you agree with that, right, guys? So let's focus on this chart, guys. Resistance is definitely at 29.75. I want to see the price break above this level in order to feel good about establishing another long position today, supported of course by many factors on the chart. But after such a fantastic move to the upside, to some people, I'm sure they are looking to sell, and that makes sense, of course, if you find resistance. Now, if you find the resistance like this one, 29.75, that's great. The next thing you need in order to convince yourself that yes, I am doing the right thing by shorting this instrument is a break below a support. Without breaking the support, we do not have enough reasoning to short this thing. And yesterday, our support survived. I think it was, what, 28.05 or something like that. I really do not remember it. I'm sorry. But the bottom line is we traded above the support for the past 24 hours. So we have no reason to sell. Now this recovery attempt, it's very impressive. It's very, very impressive. And if you draw this trend line, let me see where it lands. My God, we are just trying to break above this trend line. And in my opinion, all we need to see, even before 75, is trading above this trend line to know that we are going to give 29.75 a real hard challenge. So I'm gonna lower my resistance a little bit from 75 to this trend line, and I'm gonna use one technique to identify the level Yes, this is it. So it's 53, guys. The 88.6 retracement level for the drop from November 21st, exactly 1 week ago, last Thursday, to the next day, the low which was seen the next day. It was a very sharp drop. The 88.6 retracement level for this drop is at 29.53, and now we have two highs at only 2 pips below that. A few hours ago, or maybe late last night, a number of hours ago, we saw the price top at 51, and the current hour, the high of this current hour that it's still not closed, is exactly 51. And these two highs are very close to the 88.6 level. So I'm going to lower my resistance a little bit. Instead of 75, I'm going to use 29.53. Okay, guys. So resistance 29.53. Now, what about the support? It's very important so we can start building our trading strategy. Honestly, when you see a move that is this sharp, the use of trend lines most of the time is not very helpful. So we can use something else, maybe moving averages or something like that, or we can use other time frames in order to establish the trend lines we care about most. And it works. When we go to the 15-minute chart, we can easily see that the bottom of the moving average band is very, very close to the rising trend line. And they meet here in this area to offer support. And one more thing that is offering support, or at least it is expected to offer support in this area, is this low here, this high here. They are very close to the moving average band. Here, the band itself is in the 20s, around 25. The trend line maybe 24, 23, and this low here, it's the agent session low. It is 18. So I'm going to use 18 instead of 25. But we have support between 25 and 18. We have 3 reasons to believe that this area here, within these 7 pips, we are expecting support. So support, guys, is going to be at 18. And I'm going to use these 2 levels to build my trading strategy for the day. Support at 29.18. 35 pips between support and resistance. That's very good. That will give me the opportunity to build a trading strategy with a limited stop loss. So if we start trading above 53, I want to be long. 10 pips above that, 63. Now the support is 18. Because of the overall picture, we are finding support above support levels, above rising trend lines, above moving averages band. I'm not going to use only 10 pips below the support, but maybe 20. So I'm gonna place my stop here, 20 pips below the support, 28.98. That leaves me with a stop of 65 pips. Perfect, fantastic, I like that. It's a reasonable stop, not very close, not very far. When it's very close, you know me, guys. When the stop is very close, I don't like it. Why? Because there's a big chance of it's heading over and over and over again. If you place stops that are always 30 pips, and you say to yourself, well, what's the worst thing that's going to happen to me? I'm going to lose 30 pips on this trade. Yes, you are right. But if you place them very close, like this, 30, 25 pips, some people use that. I don't believe in this kind of stop loss at all. So yes, you are only losing 25 or 30 pips, but if it happens 5, 6, 7 times in a row, that will amount to 200 or 250 pips, and that will be painful. So do not keep your stop very close, because the probability of it being hit will increase, of course, when it's very close to the market. On the other hand, do not keep it very far, because then it will be expensive. So if you place a stop of 200 pips, that's very expensive. You don't want to see that kind of loss in your account. So the reasonable stop loss, in my opinion, should never go beyond 100 pips. and should not be less than 50 pips. And inside this 50 to 100 area, my favorite is between 60 to 70. This is the favorite stop loss amount that when I calculate my stop and I find it to be between 60 and 70 pips, I feel very good about it. If it's hit, it's okay. We can make it the next trade. And if it survives, that's fantastic. We are going to expect, of course, when we survive the stop, we expect to make some money on the trade. But we don't want to be losing 30 pips and again 30 pips and again 30 pips because we want to keep our risk low. No, you're not keeping your risk low there, because risk is it's not only the number of pips. Some people think, yeah, when I place a stop with a small number of pips, that's it, I'm managing risk. Nobody. You're not, because when you lower the pips to a certain point, then the probability of this stop getting hit is of course going to increase, and this is a factor that you need to include in your risk management techniques. So perfect stop, 65 pips, fantastic. Now initial target is going to be the 30-30, and it's very easy choice. Why? Two reasons. First of all, it is reasonable, 50 pips, not very small, not very large. And second of all, this is the highest point we have reached recently. When we were trying to break above 29.75, most of the time we stopped very close to 29.75, with the exception of one day with the daily high being at 30.13. So I'm going to use this. I'm going to use another retracement, which is 30.77 as my second target. Blue is the color for long signals, for buy recommendations. Now, what about this, the short recommendation? Well, of course, if we trade in the 40s or 30s, that's okay. But if we break below 18, I don't want to be thinking about the long position anymore. And maybe there's an opportunity to use this drop to make some profit. That's why I'm going to sell at 28.98 with a stop at 29.63. Now, what about the targets? Target 1, let's look for it. Target 2 is definitely going to be 27.01. Our retracement level, which I have shown you on the chart yesterday, remember? Now for target 1, of course, I'm going to look for a closer level. I need this to be in red, of course. All right, guys, let's look for our target here. If we start trading here in this area, then we should be retracing this impressive. It is rather impressive, guys. I'm going to see if the 50% is offering. No. Okay, what about 88.6? It's still at 98.39. Maybe this one. 98 to 52. 46 pips. What do you think about that, guys? I'm going to use this one because it's closer to this bottom here. So it is the 88.6 retracement for this recovery attempt, 28.39. $28.39. That is 49 pips to make it, or 59 pips. Yeah, that's okay. All right, guys. So this is the recommendation for today. This is the long recommendation, the short recommendation. Let's go immediately to our QTimeFX live account and place these orders. Buy stop at, let me remember the numbers, 29.63 with a stop at 28.98 and a limit at 30.13. And place, take a look at these numbers, guys. Place. Yeah, now we do have a long order at 29.63, stop 28.98, and take profit 30.13. Sell at 28.98. Honestly, I don't think it's going there, but if it does, we are ready to take advantage. 29, let me remember, 63, yeah, and 28.39, and place. Take a look at these numbers, guys. We have a sell stop at 28.98, stop loss at 29.63, and take a profit at 28.39, and done. And so now we do have 4 orders in the market, 2 on the euro, 2 on the cable, and we are waiting for any one of them to get us in the market. Okay, guys, this is a recommendation for the pound. I know it's a mess, but it's okay as long as you get the bottom line. This is the bottom line here. So screenshot these recommendations or go immediately to your QTime FX trading account and place those orders now, so you will be ready to take advantage of the movements that are expected in the next few hours. With this, guys, we need to take our first break for today. We covered 2 instruments and I'm very happy about that. We're going to take a short break, 5-6 minutes, something like that, and when we come back, commodity hour. Okay, guys, we're going to talk about commodities. The second hour, gold and oil. If you have any questions, please shoot. Okay, please shoot. I'm going to take a look at your chat, at your comments after the break, of course, and we are going to continue this. Meanwhile, enjoy your break, and it is time for me to remind you that this webinar is sponsored by our favorite broker in the whole world, QTime FX, which is offering you fantastic trading opportunities and fantastic promotions, guys. A maximum leverage of 500 to 1, and of course it was not a surprise to see QTime FX winning the award for the lowest forex spread broker of 2018, and I really hope they're going to get it in 2019 and 2020 and 21 and so on, because they deserve it, guys. They are offering you unbelievable spreads, so come and enjoy them, come and use them, come and trade with such amazing spreads. Imagine yourself trading with only 0.4 of a pip on the euro dollar and the dollar yen with 0 commission. Of course, guys, if we charge you commission, then these spreads will not look very attractive, and that is what a lot of brokers do, but not here, not at QTime FX. We do not do that. We are offering you fantastic spreads, and we don't want commission in return. How good is that? And of course, to feel very good about the security of your money, we are keeping our client funds segregated in UOB, which is ranked in the 22nd place in the World Bank ranking. It's fantastic. And to top that, guys, we are offering you, of course, the current promotional offer. It is the bonus, the 500 bonus that is it has everybody talking about it. We get questions, we get clients, potential clients all the time talking about this bonus, asking us questions. So it is very easy. Let me explain it to you. You make a deposit of $150 or more, and you will be entitled to receive a bonus of $250, guys. That is more than you are going to deposit. Again, more than you are going to deposit. When you deposit $300, we are giving you the chance to make yourself a very generous bonus of $500. And remember, guys, these are not only numbers in your account. A lot of brokers do that. They are giving you trading credit, but you can never withdraw that. No. We want you to withdraw this. We want you to trade the needed number of lots, of course, and then withdraw it. You can withdraw equity equal to $1.50 for every lot you trade. So accumulate these lots, make your trades, open and close your trades depending on the recommendations we are giving you, make money in the profit from the recommendations, and then again make money in the bonus. $500, you can tell the missus we got $500 in bonus, and of course she's going to tell you how to spend it, right, guys? I'm sure you married guys understand what I'm talking about. So make the missus happy, or if you are a single man, go ahead and buy that gadget you've been wanting, you've been looking at. $500, very good amount to spend here or there. And we want you to enjoy it, guys. We want you to withdraw this bonus. We want you to take the money. So please come and take the money. But of course, one very important note, guys, to get these promotional benefits, you must contact FX underscore Edicast via Telegram. So don't hesitate. Our very friendly, very professional team is there waiting for you to help you to answer any questions you may have or to help you in the account opening process. If you have any question about QTime FX, we're here to help. If you have any questions about the promotion and the bonus, we are here to help. If you have any question at all, if you want to ask us about the results from the Champions League games yesterday, we are here to help. So don't hesitate. Contact us at fx underscore Edicast via Telegram, and we will be very, very excited to help you. We'll be very pleased with your questions. And of course, guys, one last thing. QTime FX is sponsoring these webinars because they love you. They want you to make money. They want me to show you the best opportunities in the market. And this is not free. You know that, guys. This is not free. You cannot get a trader with 19 years of experience in the market and a CMT designation to do analysis for free. Sorry, but in the real world, that does not happen. So they are paying me on your behalf, so you guys get this analysis for free. That's how much they love you. That's how much they want you to make profit in the market. So come trade with a broker who wants you to be successful, who makes it easy for you to be successful. QTime FX, we love QTime FX, and we're sure that you will love too. So contact us at fx underscore Edicast via Telegram, and let's open this account for you today. Okay, guys, a break, 5-6 minutes, something like that, and I will be back. See you then. Okay, people, we are back. How's everybody? Let me know how you are doing, guys. I really hope you are doing great. I hope that you are watching this market, enjoying the movements, looking for trading opportunities. This is what we are going to do in the next hour, and that is commodities. So let's get to it. But before we do, of course, I want to give a huge thank you to QTime FX, our sponsor, our favorite broker in the whole world, who is offering you fantastic trading conditions, guys. Fantastic, absolutely fantastic. Very low spread, zero commission, segregated funds, and on the top of that, a bonus of 500 real American dollars. To get these promotional benefits, do not hesitate to contact us at fx_decast via Telegram, and we will be more than happy to answer your questions, to help you in anything you need, from opening the account to answering any questions about the promotion, about the broker, about anything at all. So let's move on. Let's go to the charts, and let us start talking about commodities for today. Gold, of course, our favorite commodity. You know the main outlook that I have, and I will continue to have as long as we do not break below the bottom, which was seen recently, almost 2 weeks ago, a little more than 2 weeks ago, when we bottomed 2 pips away from this Fibonacci level at 1446. It was unbelievable to see the price bottom this close to a Fibonacci level, a long-term Fibonacci level, and then close the day with a doji candle, and then start recovering. Very, very nice atmosphere here. I made some good profits, some good money here, but unfortunately here it was not the same. So I'm still looking to have enough reasons to support one side over the other and start making profit again, just like I did here. Okay, guys, so let's move to the hourly chart first, and let's see what the indicators are saying. I'm gonna focus on the chart for a minute, guys. Full screen chart. Well, as you can see, not a lot of action recently, mostly horizontal, not a very strong direction to the upside or downside. Maybe we can use horizontal lines like this to identify where are we finding support or resistance. Of course, as you can see, we have been moving between the lower 50s to the lower 60s for the past hours, for the past couple of days, since the beginning of this week. Not a lot of action, but we want to see action. I really think that gold cannot continue trading like this. This is gold. It's not the euro. It's not the boring euro. This is gold, the excitement maker. So let's see, guys, where we can start believing that gold is going to the upside. Of course, our bullish bias is based on a number of reasons. One of them, or on the top of that list, comes the bottom that is very close to the Fibonacci level here. It's very, very close, and the recovery that followed testing this Fibonacci level is definitely bullish. In every way you can look at it, this is bullish. But unfortunately, we did not enjoy that atmosphere for a long time. We had fantastic trades in this area, but again, this drop, of course, we expected a drop after this recovery, but it dropped below our expectations. I was saying to myself, well, 60 max, and then we will start rising again, but we got closer to 50. So this part of the drop is a little bothering to me personally, but I will be looking forward for a break to the upside, or maybe to the downside, who knows. But if you ask me which one do you prefer, of course, I expect the move to be to the upside. And I'm gonna keep my bias unless we break below 1446. Just like yesterday, I have said this yesterday, and I'm saying this again. 1446 is the support that I'm counting on, and I will not, guys, will not change my mind about a very shiny precious metal, a precious metal that is going up, that is going to be in demand with prices rising. I'm not going to change my mind about that unless we break below this bottom here, this Fibonacci level 1446. So even if we got to 50, 48, I don't care. I'm not going to change my mind. But if we start trading below 1446 with a good number of pips, then that's it. I'm going to give up and say to myself and say to you guys that I was wrong this time. Okay, so where is the resistance? This falling trend line makes a very good resistance in my own opinion, but it's a little bit far from current levels, more than 50 pips. So I'm going to look for something closer and see if there is something that deserves our attention or not. This may be a very small trend line, but it's extremely accurate, and it's very close to the moving average band here. So the top of the previous hourly candle at 57.5, I really believe that this can be a good resistance. And I'm going to use this resistance for now. Breaking above it, in my own opinion, is a reason to go long. Of course, we don't have one resistance. We never do have one resistance or one support on a chart. This is very important here. I like it very much. But without breaking above this trend line, in this area here, we need to be careful. We will be in profit, but of course, we need to be careful. Once we confirm the break above this trend line with a break above this larger trend line, then things will become much more exciting for the bulls. Okay, guys, so the first piece of information I want to leave on the chart is the support at 57. Sorry, resistance, sorry. Resistance is 57.5. So this is it, guys. We have a resistance here, and I want to be long about this resistance. Now the support, of course, we have, let me add to this resistance. The second resistance is going to be this trend line, and the next few hours is going to be very close to Monday high, the high seen on Monday in Asia. During the Asian session, we got as high as 62.1. So the next resistance above this level is going to be 62.1. Now, what about the support? I'm going to give you also two support levels. The second is definitely 1446, but I want to give you a closer one. Not this low. I'm not going to use this low. Maybe we'll be able to find a reason to locate support that is above this low. And yes, we do. 52.6, guys. This is yesterday low, and at the same time, it is the 78.6 retracement level. So this bottom here, it is important. Once we start trading below it, then testing 46 will become probable. So initial support is at 52.6. So these are the levels I want you to care about most for today. 4 levels, not 2. One that is close on the upside, one that is close on the downside, and 2 that are not very close, but they are important. So I'm going to use, of course, the initial support and initial resistance to build my trading strategy for today on the long side, but for the short side of the market, for the sell recommendation, I will not issue a sell recommendation above 1446. Only with a break below this support, guys, that we are going to sell the precious metal. So buy, let's say 10 pips above this resistance. What do you think about that, guys? 10 pips, that's enough. 1457.5. 10 pips above that, 58.5. Now the stop needs to be below the initial support. Of course, we can't place it below 46. I wish we can, but that would leave us with a very large stop, 150 pips or something like that. I don't want to wait that long. So I'm going to place my stop below the initial support at 1452.6. 20 pips below that leaves me at 1450.6. And that leaves me 79 pips of a stop. Reasonable, not very large. Now let's see where we can place our targets. Target 2 from yesterday, 95.9. I still believe that we can get to this level if we start recovering. So if you see gold is starting to break resistance levels, keep in mind that this level makes a perfect target. But of course, we cannot wait this long. It's more than 350 pips from entry. We need something closer. And I'm going to give you a closer level. Something 50, 60 pips, something like that. This high here is 62.90. What do you think about that? 44 pips? No, I want something a little bit more. And for that, I'm going to calculate the retracements for this whole, what looks like a 5-wave sequence to the downside. I'm going to show you, first of all, the 5-wave sequence, and then I'm going to calculate retracements for it. All right, this ABC, 2, 3, this is a 4, and this is a 5. Okay. It's not very ideal for one reason. I don't think the internal structure of wave 1 is very good looking. But for this whole move, I'm going to use the 50% level as my target. It's 64.30. Yes, that makes a good initial target. Yeah, so 58 pips on target 1, not bad at all. Now what about the sell? The sell, guys, I don't think it's going to hit, but just in case, who knows, it's a market. You never know what happens. We can see 300-400 pips to the upside or downside any day, and that's why we're going to sell. Of course, I'm not going to sell at 50.6, stop for the buy. Without breaking below 1446, guys, a short position is not justified, So just like yesterday, I placed my order to sell 30 pips below 1446. And let's see where we can place a stop and where we can have our targets. If we sell below 46, maybe going back above 50 would be a reason to stop. That's why I'm going to place my stop at 51, 80 pips. I cannot wait for the price to drop below 46, and then again you have to wait for it to break a falling trend line. That would leave us with a stop of more than 150 pips. I'm not willing to take that kind of risk with you guys. I want our stops to be limited and our risk to be under control. So initial target, we do have some targets in the 30s. Let me refresh my memory. Maybe here. Yeah, this is the recommendation from yesterday. and I'm going to use the same levels. We have a support here that we need to care about, 1436.7, and we have the next long-term retracement level, the 50% level at 10.9. You know that we are bullish because we have found support very close to 38.2 retracement level for the long term at 1446. Now the next level after 1446 for the same calculation, the long term retracement levels, is 1410.09. That's almost 350 pips between these two levels because it's a long term calculation, of course. And that leaves the levels far from each other because we are calculating retracements for a very vast move, a very big move. Okay, so I'm going to use these same exact levels for today's recommendation. Stop at 51, and now, sorry, 36.7 is our initial target, and 1410.09. For the order placement, I'm going to use the initial target for both today. So I'm going to use this initial target and this initial target. Although I am really tempted to place a larger target, especially on the long recommendation. But I'm going to go to my QTimeFX live account and place these orders immediately. We have a buy stop at 58.5. Our stop is going to be, I think we said 50.6, yes. And our limit is going to be, although I really want to place it higher, but I'm going to do this for you guys, 1464.3. Let's hope for the best and place. There you go, guys. This is the first recommendation for gold today, along order at 58.5 with a stop at 50.6 and limit at 46.3. So go ahead directly to your QTimeFX live account, place these orders right now, and keep your fingers crossed. We're going to make some money today. Or if you want to just write them down and follow what happens to them, you want to screenshot this, whatever you like, just take these recommendations free of charge for your trading, and let's make some money today. Okay, now the other recommendation is, of course, the sell stop at 43 with stop at 1451 and the limit at 36.7. I remember correctly. And place. Go ahead to your live account with QTimeFX, guys, and place these recommendations immediately so you can be ready to use any movements in the market on gold. And we have been trading in a boring range this week. I really don't believe that this is going to continue for very long because, you know, it's gold. It's exciting. It's something that moves a lot, something that gives you excitement most of the time. When you have a boring period like what we have been seeing recently, not a lot of movements every day in the past few days, that is not going to be the case for much longer. We are hoping for a big move today, and it can be to the upside or downside, of course. I prefer it to be to the upside. I really hope it's going to be to the upside, but even if we break 1446 and the big move is going to be to the downside, we are positioned to take advantage of that. So guys, let me read some of your comments before I talk about oil. Edith, hello. Nick, hello, buddy. Michael, how you doing, Michael? Nick lost 32 pips yesterday because he got too greedy. Of course, that can happen, buddy. Any mistake can cost us money. You know, you have to know that. We have to know that. It happens a lot to beginners, of course. As you get more and more experience in the market, it will happen to you less and less, but it will always happen to you. Sometimes you do something and you say to yourself, why did I do that? That's just a part of trading. But of course, with experience, with education, with every book you read, with every year you trade, these mistakes are going to get less and less and less. But I really care to hear, how did you do that? On which instrument did you lose? You were long, you were short. Please let me know, buddy. Michael, I really appreciate your work, Munther. Thank you very much, Michael. It is really a pleasure having you here with us for one more day. Thank you for all your help. That is really, really something that I really find to be very, very sweet. I love the feedback, guys. I feel very good about what I do when I hear you guys telling me that you made money on these recommendations. I have recovered $3,400 this month. Thank you, thank you, thank you for this fantastic comment. I'm really happy that you did, and follow these webinars every day, and I assure you we are going to achieve more profit in the near future. Gold is dropping. This is a comment from our team at FX Educast. Yeah, sort of. Not a lot. It's still within reasonable limits, because without breaking below 1446, buddy, we don't have a lot to worry about. But if we break below 1446, then this drop will continue digging deeper and deeper. Ivy Grace, how can I claim money, sir? Well, this, of course, my FX Educast team will answer this in details. But first, you need to contact us at FX_Educast via Telegram. That's the easiest, fastest way for you to get your answers to any question you may have. And of course, on the chat here, our team is ready to answer you. They will answer your question, definitely. And I hope that we will have you as one of our clients very, very soon, Ivy. Okay, guys, so we're done with gold. Let's move on to oil. Crude oil. We have talked about this yesterday. We have specified a bullish setup, and that is, of course, 5 waves to the upside, 3 waves to the downside, with wave B being a triangle. That is very usual, very expected in B waves. It happens a lot. And the whole ABC sequence terminating extremely close to one of the key Fibonacci levels. That is just bullish, but of course this is bullish from here, not from here. So if you see this happening around this level, maybe with the first green candle, you can get in, okay? Or maybe at the Fibonacci level itself, although I don't prefer that method because it is risky, in my opinion. So you wait for the price to see that the price is actually recovering a little bit from a Fibonacci level after, of course, an ABC to the downside, and then you buy. But this is old news, of course. We need to see this happened I think on Monday, yeah. And we, of course, got a rising move as expected. Now what? This is very important. Now what? I want to update the support and resistance and see if we have support and resistance levels that we can count on in our trading for today. Support, I'm definitely going to use for one more day, just like yesterday, the bottom of wave C. So support is going to be $57.21, guys. This is going to be my support, just like yesterday. But for the resistance, maybe we can find another level, especially with these movements here. Let's see if that is the case. One of the things I'm interested in is this drop here. This drop, it went, of course, against what happened here, but after a good move to the upside. So we had our move here. Now we have new information in the market in the form of this drop. And what is worrying or bothering to the bulls is that after this drop, we have tried to overcome the moving average band and we failed. And this is not good. Failure here. The minute you see something like this happening, guys, you can sell. When you see the price testing a resistance like this one, the moving average band, of course, you know how much I love my moving averages, and then it starts dropping. That means, of course, a sell. A sell here. I mean, on the close of an hour like this one, because it's tested, we closed below the moving average band. This is something that I do all the time. So here, especially that it's also at the 50% level. So 58.10 was a good level to sell. Obviously, it was very obvious, very easy decision here. And if I were there at that time, I would be holding a short position, but I do not. This happened late last night in my timing, and obviously I was watching Champions League at this time. This is around 3 p.m. Eastern, which is exactly when the Champions League games start. Exactly. It is 10 p.m. my time. So, of course, I was not watching the market at this time. However, we can understand from this price behavior around the 50% level that the 50% level, accompanied, of course, by this moving average band that is getting closer and closer to the 50% level, is the resistance to watch for now. So I have a resistance at 58.10. Unfortunately, if I want to build a trading strategy with these numbers, the stop is going to be more than 100 pips. And I will try to find a way around that. I will try to look for closer levels. For example, I'm going to calculate the retracements for this recovery. Like this. The low is 57.77 here. It is exactly 61.8 retracement level, while we do have, maybe we'll have a closer resistance as well. $57.92 for water retracement calculation for this move. When I see the 50%, I'm really interested in it. It's 98, 93. So this top here with the Fibonacci level is 92. I think 92 is also a resistance that we need to care about. So I'm going to add levels here. 57.92 also in the resistance department. And I think we had a support at 77.57, 77. So now we have 4 levels, just like with gold, that we need to care about. Initial support and initial resistance, and then the main support and the main resistance. Just in black, please. This is not a recommendation. Recommendations go in colors, of course, blue and red, but not support and resistance statements. So guys, now we do have these levels. To tell you the truth, I don't want to sell even, yes, 57.77 looks important, but even with dropping below this level, I don't want to sell because we have a bottom of wave C here, according to this wave count, which makes it very hard to convince yourself as an elitician to sell without a break below 57.21. If we break below 57.21, then short position will become justified. So I'm not going to use 77, although it is an important support that we need to care about, but it's not enough. Trading below this level is not enough to initiate a short position. However, 57.95 is a level that we can use in our trading. So what I'm going to do, guys, is I'm going to sell the first few pips below 57.21 and buy the first few pips above 57.95. So immediately to the trading strategy building. Five pips. Let's. I'm just thinking out loud, guys. This is not the final recommendation. I'm just thinking. And sell at 57.16. What do you think about that? 84 pips. Yeah, I'm gonna go with that. Okay. So targets. Let's look for the targets. Okay, if we start trading above 58, we can use the retracement levels as targets. 59.84, this is the level. I'm going to take a look at our entry is going to be at 58 exactly. So I'm going to use 58.65 as initial target. This is, of course, very close to the highs we have been seeing recently. This is a weekly chart. Let me change it to a daily. Maybe it will be easier for you to see how we have been finding resistance around this level recently. 58.65. So I'm going to use that. Now for the second target, I'm going to use the 71.4 retracement, 59.84. Okay, guys. This is the bar recommendation for now. Now what about the sell? It's going to be, of course, a reverse. Sell at 57.16, stop at 58, targets. Okay, let's look for targets. If we start dropping below 57, breaking this bottom here, which is supposed to be the bottom of wave C, then a retracement of this whole move is going to be expected. And I'm gonna go to the hourly chart here. I love retracements. I'm sure you can tell. I'm sure you can tell how much I love my retracements. And that came, of course, after years of experience. So once we start trading below this level, there's a good opportunity of moving lower. The 50% level is not very far. It is at 56.80, but we do have, I'm interested in this bottom between the 50%, 61.8, and I'm sure it's very close, very, very close to the 2/3 Dow ratio. No, sorry about that. It's not. I don't want to spoil you with this retracement. I'm going to keep this secret, this part here. But this bottom, right below the 50%, guys, is going to make, in my opinion, that's a good target, 56.60. So 56.60, and then, of course, I want a larger target, even below the 71.4. I'm going to use 78 and 88, looking for some levels. As you can see, guys, on the way higher, we don't have anything to stop the price here. We did not see any attempts to stop the price here, and that of course leaves us with, you know, feeling not very good about targeting these areas. So I need to see something lower than that, maybe around very close to this top, and what is really close to this top is 55.68. And there you go, guys. These are our recommendations for oil today. A long at 58 with a stop at 57.16. At the same time, a short at 57.16 with a stop at 58. And the targets, as you can see on the screen, initial target is 58.65. A larger target is 59.84. This is for the long. For the short, a recommendation, we have a short at 57, of course, 16. Initial target 56.60 with a second target at 55.68. And there you go, guys. This is what I think about oil for now, crude oil futures. These are the numbers that we need to care about. We have a support at 57.21. We have a closer support at 57.77, but we're not going to use that to build a trading strategy, because without breaking below the bottom of this C wave, I don't think that shorting it is a good idea. On the other hand, we do have resistance at 57.95, and once we start trading above that with a very small number of pips, a long position will become justified. So that's why I have this buy at 58. So this is it, guys. Thank you very much for being here for another hour. We still have 1 hour on this webinar. We're going to take a short break, only a few minutes, and then we will be back. Before I go, I really want to thank QTime FX, our favorite broker in the whole world, for sponsoring this webinar. Guys, QTime FX sponsor this webinar for a reason. They want you to make money. Okay, these guys at QTime FX are the kind of guys you really want to work with, because some brokers are very happy when their clients make money, and I'm sure you know it's not a perfect world. Not every broker is like that. So you want to be working with a broker who is offering you trading conditions that makes it easier for you to achieve profit in the market. And QTime FX is a fantastic example of that. They are offering you a maximum leverage of 500 to 1, and it was no surprise at all to see them receive the award for the lowest forex spread broker of 2018 by the ACI FMA because of these spreads. Look at them, guys. Euro dollar 0.4 of a pip, dollar yen 0.4 of a pip, and similar very attractive spreads on all majors, with of course zero commission. If we had commissions charged, then you would not be very happy about these spreads. No, we want you to make profit. We want you to trade with spreads with no commission. And to top that, guys, we have our current promotion that can give you a bonus of up to $500. 500 real dollars, guys, an amount that you can withdraw. Make a deposit of $300 and you will be eligible and entitled to receive $500 in bonus. Or you can make a smaller deposit of $150 and you will be eligible to receive $250 in bonus. But of course, to get these promotional benefits, you must contact us at fx_dcast via Telegram. So do that immediately. Come ask us how you can get these benefits, these amazing trading conditions. We are here to help with big smiles on our faces. So contact us. with questions, with any request for help in opening your account, and we will do that immediately. So thank you very much, QTime FX, for the sponsorship. Very generous of you, and it shows how much this broker cares about their clients. With this, guys, it is time to take our second and final break of the day, 5-6 minutes, something like that, and I will be back. Hope to see you then. Bye bye. Okay, guys, we are back. How are you doing? How's everybody? Let me know. Welcome to our third and final hour of today's webinar. Before I begin, I just want to take a look at the chat. Hey, my fellow traders, how is everybody doing? This is what I just wrote, and I want to hear how you guys are doing. I hope you are making profit this week, and I hope we're going to add to that profit today. So, Michael is always here. How's your Thursday morning? Well, it is a little bit slow because of the euro and gold. I want to see these things moving to the upside, to tell you the truth, or move at all in any direction, any move that can help me make some profit, because at the time being, they are just getting really, really boring, and I want to see some action in the market. So, Michael, if you see action in the market later on today, you know that I am doing great. And I hope you have placed the orders we have talked about so far, especially on euro, gold, and that you are ready to take advantage of the market movements. So we are done with commodities. Second hour was the commodity hour, and now we are moving to other instruments. First, the yen, my beloved dollar yen that I'm really, really interested in. Guys, we have been talking about the 109.37 as a resistance for a very long time, and we were expecting to see movement to the downside from that level. Yesterday, we have tested this level and tried to push beyond it. We got as high as 61, which was not enough to trigger my long signal because it was just a little bit above that at 67. And that shows you why you need to be flexible with these very important levels. Some people think that 10 pips, that is enough for a key level to be broken. When you have a key retracement or a key support level, you don't jump in very fast when you think they are broken. Okay, these are not like your everyday levels. When you have a level on the 5-minute chart or 15-minute chart or even the hourly chart, yeah, it's okay. 10 pips above resistance, 10 pips below support, and you can jump in. But when you have a level that has been showing its importance for the past 3 months and telling you that I am the level to watch in these areas, you don't jump in very fast, especially if you have reasons to believe that the market direction, the overall direction, is still against the break of this level. This is exactly what is happening around 109.37. The market is trying to push beyond it, and if it does, if it's finally broken, that's fine. We are going to follow the break. But we have a number of observations on the chart to show that the overall direction is to the downside, not to the upside. And that is why we need to give this level some flexibility. We need to give it some time to do its magic. So 15, 20 sometimes pips above such levels, and then the market crashes. So I'm going to do exactly the same today like I did yesterday. I need to see 30 pips above 109.37 before I can say that it is broken. Up until now, we got 24. So I need just a little push above yesterday high, and I will consider this level broken. But up until now, we don't have that push. So the bears are still fighting the good fight. And currently, we are at 40, guys. And the Fibonacci level that we are very interested in is at 37. So we are very, very close to that level. Of course, guys, I said this yesterday and the day before. I said that although we prefer the downside, definitely we still prefer the downside even with this push here. But we do have some bullish observations on the chart, and that was in the form of finding support inside the moving average band, like here and here. These are very interesting observations. When you see this happening, you know the market's going to the upside. But when you have a very strong resistance level ahead, then these movements to the upside will probably terminate just a little bit below or above such important levels. That's why longing from here was not preferred. We did not do that. We preferred to wait for a move to the downside. And as I'm speaking, I think gold has reached a new daily high, and it is trying to break above our moving average band and above the falling trend line that we were talking about, guys. We are pips away from triggering the buy signal, so keep your fingers crossed. This is probably going to be the first signal that is triggered for today. Let's continue talking about the dollar yen. So guys, I will continue to ask for the same thing, and that is 30 pips above the resistance at 109.37. So that's why I'm gonna keep the buy entry exactly at the same level as yesterday, 109.67. If we get there, we are going to forget about the possibility of moving to the downside and join the bulls. But as long as we don't, I don't prefer that to happen. I'm not going to sell, I'm not going to buy the dollar yen before seeing this number on my screen. So I'm going to place a buy order at 109.67. Now, what about, of course, the support? As you can see, guys, we have a rising trend line. We have been talking about this rising trend line for a while now. Yesterday we talked about it. It is currently running around 109, but I'm more interested in the moving average band. As you can see, guys, finding support here, and again here. This indicates that this moving average band is working its magic, and it's providing support to the dollar, which of course enables it to keep on pushing to the upside. So if this moving average band is broken, even without breaking this trend line, I want to be short on the dollar yen. So the bottom of this moving average band is around 20. I'm going to use some technique here, guys, to identify the exact level. I'm going to see if we have a retracement level that's very close to this one, and unfortunately we do not. So I'm going to use retracements for another calculation, but let me see, 5, 3, yes, from here. I want to see if we have something very important around 20, and we do have the 50% level at 23. And if you pay attention here, guys, we also have a support at 32. Just look at these candle bottoms here, and it's a 38.2 retracement level. But I prefer to wait for this one because it's the closest to the moving average band. So my support is going to be 109.23, and I want to sell 10 pips below that. So 23. My stop is going to be 10 pips below that. Stop, instead of 23, it's going to be 109.13. 54 pips, yeah, that is reasonable. We don't need to place a larger stop because we are very close to the important resistance that we are counting on with our bearish outlook. Okay, now for the targets. Target 1. Target 2. Okay, initial target, I wanted it to be something that is around 50 pips. I'm going to look for a target in that area. As you can see, this day is starting in a fantastic way. Red candle to the downside after these 3 green candles. I hope by the end of the day we will be retracing a large if not all of this daily candle. If we close below the open of yesterday, which is 109.02, that would be fantastic for the bears. Fantastic, absolutely fantastic. So keep this number in your head at the end of the day when you want to see where the dollar yen is closing. Below 109.02, that is fantastic for the bears. Okay, now let me get this here and try to go back to my hourly chart. Now, once we start trading below the moving average band, of course, we are going to start targeting retracement levels and this trend line. Once we break below this trend line, guys, the possibility of testing this bottom will become great. For me, I'm going to settle for the 78.6 here, around these bottoms here. It is at 108.54. That's going to be my initial target, 108.54. $59 pips, yeah, that makes sense. Okay, now for the second target, I'm gonna be a little greedy. Of course, you know my long-term target is 104. Yes, guys, 104, 500 pips from current levels. But of course, I'm not gonna make you wait that long. I'm gonna give you a closer target. This bottom here is very, very interesting to me. And it is at 107.88, 89. I'm gonna place it at 107.89. These are the two targets for today. Sorry, guys. You can tell that I am not really I'm not really up now. I still need some time to wake up, I think. So I placed the limits for the short in blue here. No, I need to place them here. So 109.67, and we have target 108.54, and target 2 107.89. And yeah, now it's the right thing. Of course, you can remember from yesterday we have retracement level at 1013. I'm very interested in that retracement level. It's the long term, or let's say the medium term, 71.4 retracement level. And above that, I used to talk about 1240, but it's very far. I'm going to find you a closer level. This is 1013. This is the retracement I'm talking about, guys. It's very important. But what looks like even more important is 1070, because it's 78.6 retracement level, Fibonacci level, one of the key Fibonacci levels, especially if you are a harmonic trader or harmonic analyst who here uses harmonic trading, guys. 78.6 is one of the sacred numbers in the harmonic world, and I think it's a good retracement level. Especially that, as you can see, guys, the high here was 67 and the level is 70, so we do have a previous resistance very, very close to 1070. That's why I'm going to use 1070 as my second target. And the thing about today, guys, is that with the test of the Fibonacci level, no matter what is going to happen next, a break to the upside or a failure to break and then a drop to the downside. In both cases, I think that the yen is going to move. That's why I'm going to use the second target for my orders today. Not the first target. I'm going to use the second target on both recommendations. So let's head to our QTime FX live account. and place our orders. So you need to buy, if we get to 109.67, I'm going to buy, of course, against my expectations, guys. And this is how you become professional. You do not let your emotions make the decisions for you. For me, I'm definitely a bear on this market. But hey, if we break above 109.37 with the enough number of pips, the number of pips that I have specified in advance, which is 30, if we do that, then I will immediately buy it. You may find that strange. Well, Munther, you have been talking about shorting the dollar yen for more than 2 or 3 weeks now. Yeah, but I follow what the market is doing. If the market is moving to the upside, I will immediately say to myself, well, Munther, you are not right about selling the dollar yen, because look at the market. The market is moving to the upside, and you have to follow the direction of the market. So I will have zero problems buying the dollar yen at 109.67 in spite of my bearish bias. My stop is going to be 109.13, right guys, 109.13, and my limit is going to be the second target, not the first one, which is 10.70. So 103 pips. Keep your fingers crossed. Now, what about the sell? My favorite among the two, but of course I will keep them both and I will follow the direction of the market. Sorry about that. Sell at 109.13. 109.13. My stop is going to be, of course, 67. 109.67, and my limit is going to be not the first target. I'm going to place the second target, guys. Okay, so today on dollar yen, in both cases, we are using the second target in our orders. 107.89. Another target, 3-digit target, triple digit. 107.89. Let me check the numbers. 107.89. Yes, that is fantastic. 124 pips of profit if we get this area right. And I hope we do. But if we go higher to 109.67, we'll be stopped out and we say to ourselves, hey, enough is enough. We are not going to short the dollar yen and place. And as you can see, this is the order, and we have our order. Now 2 orders on the dollar yen ready to take advantage of market movements. So head to your live account, to your QTimeFX live account, and place these orders, or write them down, take a screenshot, do whatever you want, keep them in any way you prefer, and we will be back talking about them tomorrow, of course, to see what happens to them. So this is it, guys, for the dollar yen. We have talked about euro, pound, gold, oil, and now the dollar yen. Anybody with anything on their minds, if you want me to take a look at any market, just let me know. One of the markets that relates to the dollar yen is, of course, the euro yen. And we are going to look for trading opportunities there to see if we are in luck of having a trading opportunity there. So guys, as you can see, we were talking about a resistance at 25 yesterday, and unfortunately our order to buy at 35, it seems like it was touched after we canceled. Yes, just a little bit after we canceled the order, because I felt strange about seeing this, because yesterday we were trading here and we did not get our order at 2035 triggered. And that is, of course, because this happened after the close of the European session. So this recommendation from yesterday was not triggered. If it had been triggered, we will be in a small profit now, maybe 5 to 10 pips. That's it, not a lot of profit. Okay. So the first thing that we talked about yesterday was this 5-wave sequence to the upside, which looks very exciting. But after that, we have been spending a lot of time moving up and down without real direction. And with pushing as high as this area here, I think it is easy to spot the resistance. Don't you think that, guys? It is easy to spot the resistance for now. And it is here. My God, that was an easy job. This was on the 21st of the month, we had a high of 58, and yesterday we had a high of 60. So 58 here, 60 here. The resistance is obvious. I'm going to use 58, the previous high, as my resistance. Now for the support, yesterday we talked about 1965, which is this Fibonacci level here. Or it's not Fibonacci level, it's a Marji level, 71.4. Now, of course, with the recovery up from this Marji level, from this retracement level, 71.4, we can use trend lines to identify support and resistance. And one of the times that I really like is when the trend line and the moving average band are getting closer to each other, getting very close to each other, because when they unite, they indicate an important level, support or resistance, of course, depending on the situation. Now, this trend line is currently running around 2018, while the bottom of the moving average band, as you can see here on the side of the chart, is between 30 and 24. So I'm gonna use 24 as my support, and it's moving to the upside. So I'm gonna push it just a little bit to meet this top right here. Let me show you what I'm talking about. This top right here, this price top, the agent session high from yesterday, it was 27. So I'm gonna use 27 as my support. Okay, guys. Very close to each other today, not very far. 27 support, 58 resistance. And I'm going to follow the direction of the break. That, of course, because they are very close to each other, that gives me the opportunity to build trading strategies around these levels with a stop that is not very large. Okay. So let's go for it. First of all, I want to delete these. I don't want you confused with the signals from yesterday. I'm going to give you a target immediately. One target for every signal, and we are going to go to our trading platform and please place these orders. So guys, if we break above 2058, what I'm going to do is I'm going to buy this thing. So let's try 10 pips and see what happens. 10 pips above it, 2068, while the support 2017. How about that? 51 pips. Yeah, that is the kind of risk I want to handle today on the euro yen. I don't want more risk than that. And I like it. I like it that the support and resistance are only 31 pips apart. So now, what about the target? Let's look for a target on the upside. If we break above this level, of course, then another wave to the upside is going to be expected, and it's going, of course, to trade above the previous top. But, you know, trading above the previous top is not a really ambitious target because it's very close. So we need to look for other levels, closer levels. We need close, but not too close. I really believe that we do have a resistance area between 2130 and 2150. We talked about this many times previously. Here, as you can see, the highs here, 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 here. So this area will become targeted if we start moving to the upside. And inside this area, I really believe that we can pick anywhere, of course, between the bottom and the top. I'm going to be modest and use something close to the bottom. This high here is 36, 2136, and I'm going to use it. I'm not going to push it towards 50. So 36 is going to be my limit. 2137, 2136. That's 68 pips, right, guys? So with 68 pips, it's not a very small, not large target. Just right. Now, what about the sell? The sell, of course, is going to be a reverse. I'm going to sell if the market drops to 2017, 10 pips below our support, with a stop 10 pips above our resistance, which of course makes it a reverse to the buy signal. 51 pips in a stop loss. Now, what about the target to the downside? Target or limit? Let me look for a target. So we will be selling at 2017, which is here, just below this trend line. And for that, of course, we can expect the market to at least challenge the bottom from which this trend line is drawn, if not even trade below it. This low here is 63, guys, 1963. So what do you think? We use 1963. Yes, it makes perfect sense with this entry point. 54 pips of profit. Let me rearrange these so you find it rather easy to locate the signals. So this is it, guys. These are the recommendations for today on the euro yen. And of course, one very important thing that I need you to keep your eye on is this. When we have breaks on the euro yen, that will help us understand what is happening with the dollar yen. So the yen itself is going to be in the center today, and it has been for a while. Why? Because we are testing on the dollar yen, we are testing a very important level. And I want to see what the market is doing away from this level. So if we get a break to the upside on both pairs, that means that the market is going to the upside. The yen is going to get weaker and weaker, and our bearish hopes of seeing 104 on the dollar yen will become something very hard to believe in anymore. So we will stop believing in that. But in case both of these instruments, the dollar yen and the euro yen, they break to the downside together or within a short period of time of each other, that would really help our case for a strong yen ahead. I really want to see a strong yen ahead. But of course, as I said, guys, I follow the market. If the market proves that this vision, this outlook is correct and it's supported on the chart with technical analysis observations, then I will continue to believe in it. But in case the opposite happens and the market breaks to the upside, then of course, I'm a professional trader, guys. I'm not in this game to root for one side over the other. I'm not here because I love one currency and hate the other. This is not my favorite football team, So I will jump on the side of any instrument that any currency that can help me achieve profit. And for that, of course, I use my chart. If my chart is pointing to the upside, Even if I want to see the market going down, I will follow the chart. I will follow the price action. Always use price action to make decisions. Not your gut feeling, not your heart, not your favorite scenario. The market does not care about your favorite scenario. It does not care about my favorite scenario. It does not care about the favorite scenario of Warren Buffett or George Soros. Nobody, no one person can control the market or force it to go in the direction they want. So stay humble, stay modest, and be ready to follow the direction of the market. I really hope to see the dollar-yen crash, but if it does not, then it does not. If we are trading above 109.37 with 30 pips or more, then I will surprise you with a long position. And I already have my order to buy at 109.67. So let's see what will happen today. And before we move on, guys, we want to place, of course, our orders. So dollar yen, guys. Sorry, dollar yen. We're done with the dollar yen. Euro yen now. Euro yen, guys. We're going to buy at 20.68. Buy stop. My orders, as you can see, are always stop orders. Why? Because I follow breaks. And when you place an order to buy upon a break or to sell upon a break, that is a stop order because you're buying above market or selling below market. If I was waiting for these levels to survive and then I want to use the rebound from these levels, my orders, of course, would be a limit. Buy limit, because here's the market, I want to buy at a better price, that's a limit order. Or sell limit, here's the market, I want to sell at a better price, higher price, then that is a sell limit order. For me, my orders, as you can see, every day, most 90% of my orders are stop orders, buy stop or sell stop. So let's see, where are we getting in today on the euro yen? 20.68. 20.68, guys. We're going to buy here with a stop, very reasonable stop at 20.17, 51 pips. I like that. And the target's going to be 21.36. 21.36 and place. So there you go, guys. Buy stop at 20.68, stop loss 20.17, and take profit 21.36. Go immediately to your QTime FX live account and place these orders right now, so you'll be ready to use the movements in the market today. I want you to be ready because, you know, the past few days they have been boring. Yesterday, out of 10 recommendations, 10 orders that we placed on our account, we only had one triggered. Today, I really hope that we are going to get in the market with more than one trade. So keep your fingers crossed and let's make some money. The second order, we're going to place, of course, a reverse. It's going to be a sell at 20.17. Again, sell stop, of course. 20.17. My stop is 20.68, of course. And my target is going to be 19.63. Go ahead to your QTime FX live account and place this order right now and hope for the best. So click place. And we are done. So now we have working orders on these instruments that we have been analyzing for almost 3 hours right now. And we are ready to take advantage of any movement in the market. I'm going to keep this on the chart on the screen here for a minute or so. So if you want to copy it, if you want to go to your trading account and place these orders immediately, then I think that you can do it. And for the last 10 minutes or so of today's webinar, I'm going to take a look at the dollar index. We're not going to, of course, we're not going to place orders on the dollar index, but it's very important to look at this instrument from time to time, and that of course will help us understand the market more, because in Forex, a large percentage of traders trade mostly the majors, with the dollar involved in every trade. So when you understand where the dollar is going, that will help you understand where all the instruments that you care about are going. The euro dollar, the dollar yen, the pound dollar, the dollar Swiss, Aussie dollar, Kiwi dollar, dollar loonie. So it's there. And of course, gold, when we talk about gold is, the rival of the dollar as a base or basis for the whole financial system of the whole world. And that, of course, indicates the relationship between them. If the dollar is expected to go higher, then of course we expect the precious metal to dive, and vice versa. So it is important to take a look at what the dollar is doing from time to time. And to me, I have been counting a 3-wave sequence to the upside. Now it may be counted as 5. Let me see. I have not taken a look at the dollar index chart for a few days now. It's 3. So this 3 here, A, B, C, yes, here. This is the end of wave 4, not this one. And then wave 5 to the upside. This needs just a little bit of adjustment like this. And here we need to do this. I want to delete this count here. It's So guys, what we see here is a 5-wave sequence to the upside, and it topped at a previous top. So how can we read this? First of all, when you see a 5-wave sequence to the upside, most of the time it means that the main direction of the market is to the upside. We have an exception for that, of course, and that is if the 5-wave sequence can be counted as C, then it's the end of a correction, and a new trend will be born at that exact point. But no matter what you think, when the 5-wave sequence is complete, it's time to move to the other direction. Maybe a correction, only a 3-wave sequence to the downside, or maybe a whole new trend with 5 waves to the downside. In both cases, what happens after the termination of wave 5 is a move in the other direction. Add this to the fact that we do have a previous top that is very, very close to this top, the top of wave 5, and you find resistance here. Of course, you can spot this resistance. As you can see, it's very obvious. So we have 2 reasons to believe that the dollar could start falling from current levels, and it already did. Actually, it already did. One of the targets for any corrective move is wave 4, the bottom of wave 4 of 1 lesser degree, and this is the bottom of wave 4 of 1 lesser degree. Not this one, this one. This is the previous wave 4. So of course it can also be this one, but this is more preferred as a target to the downside. This is not very far, of course. We are now around 98.30, 35. This is 98.17, but this indicates that we have a support at 98.17. Once we start trading below this level, then the American dollar may be facing some very hard times. But as long as we are above 98.17, it looks good. It looks okay. It's not destroyed, but there's a possibility, of course, because of the resistance and because of the 5-wave sequence completion to the upside. It's time to move now to the downside. So support is at 98.17. And if we start trading below the support, that is weakness. Now, what about the resistance? Resistance is, of course, at this high here. Without a doubt, it was 45 here. The high here is 45. This was exactly 15 days ago on November 13th. And recently we have seen 44. So it's one single pip apart, guys. 2 weeks, two tops with one pip between them. And this indicates, definitely, this indicates a resistance in this area. So these are the levels we need to care about, guys. This is 17, this is 45. If you want to follow this thing through the day, just look at these levels. If you see that we are above 45, then expect the dollar to continue moving higher. And that, of course, means a drop on the euro dollar, a rising move on the dollar yen, and so on. And of course, a drop on gold. But if you see the market trading below 98.17, then you know that I am a happy man with a smile on my face, because I want to see the dollar get weaker from current levels. It's not a personal issue. It's just that we have many technical observations on many charts that indicate that the dollar is not going to be capable of keeping these high levels, and soon it's going to give up and start falling, because we have a bullish setup on the euro dollar, a bullish setup on the precious metal gold, and a bearish setup on the dollar yen. So all three charts point to dollar weakness, and that's why what I really prefer to see here is some dollar weakness. I want to see the price below, or the index below 98.17, and if this happens, I will be very happy. With this, I'm gonna leave you today, guys. It has been fantastic talking to you for 3 hours again. Meet us again tomorrow, where we will be talking about today's recommendations, what happened in the market for the next 24 hours until we meet again. Actually, they are 21 hours. We are going to meet again 21 hours. I'm going to talk about what happened in the market, what happened to all our recommendations, which one made it to the limit, which one made it to some kind of profit, and which one was closed with a little bit of a loss, which one was closed with a stop loss. We'll talk about all of that tomorrow, and we'll see what kind of profit or loss we are going to achieve today. Yesterday we made 44 pips, not a lot of money, but it was okay. It was okay, and we hope to do the same today. I will be happy if we made 50, 60 pips today to add to what we made yesterday. And tomorrow, of course, it's going to be the last day of the week. So we are going also to talk about the meaning of weekly closes. If this instrument closes at this level for the week, that means something. If it closes at this level, it will mean something else. And this is very important, guys. So don't miss tomorrow webinar. It's going to be very exciting, and I will be here to help you for one more day spot the best opportunities in the market. For now, I'm just gonna wish you to have a fantastic day ahead, day, night, evening, morning, whatever it is, wherever you are. I want you to make money. I want you to keep your eyes on the chart. I want you to believe in technical analysis, because it is the best tool that we have to predict the market, no matter what anybody else says. I'm a radical technical analyst, you know me. So guys, as I always sign off, good trading and good luck. I say this at the end of each webinar. And of course, I want to say a big thank you to our sponsor, QTimeFX, because this live stream was sponsored just like every day. It was sponsored by QTimeFX, our favorite broker in the whole world. This live stream was sponsored by QTimeFX, our favorite broker in the whole world. A big thank you to QTimeFX, because they care about you guys so much. They wanted me to come and give you these trading recommendations. They said, Munther, come and show us what you can do for our clients. We want you to give them the best trading opportunities in the market every day, because we care about our clients. We want them to make money. And I said, of course, I want them to make money too. So that's why we are working together, guys. We are working together to give you the best trading opportunities, to analyze everything that interests you, even the dollar index, gold, whatever it is. We are here to help you identify the best trading opportunities in the market. And that's not all, of course. That's not all, because QTime FX is not only sponsoring this webinar for your sake to help you achieve profit in the market, they are offering you fantastic trading conditions, guys, starting with the maximum leverage of 500 to 1 and fantastic spreads, guys, amazing spreads. As you can see on the screen, only 4/10 of a pip on the euro dollar and the dollar yen with 0 commission, which is amazing. Of course, if you have been offered the chance to trade with very tight spreads but charge commission, then what's the use, guys? What is it that you are achieving? No. We don't do things like this here. We want you to be successful. That's why we are giving you the chance to trade very tight spreads with no commission. And to feel better about your funds, we are keeping our client funds segregated in UOB, which is ranked in the 22nd place in the World Bank ranking. And to top that, of course, guys, we have our very successful promotion of offering you $500 in free bonus. Real money, guys. This is not a trading credit. This is real money that you can withdraw and spend in any way you like. You can open a VIP account with us with a minimum of $150 deposit, and you will be entitled to get your bonus of up to $500. When you deposit $150, you are going to get $250 in bonus, more than your deposit. And again, when you deposit $300, you are going to get a bonus of more than what you have deposited, and that is, of course, $500. But of course, to get these promotional benefits, you must contact us at FX_UCAS via Telegram. So don't waste your time trading here and there or trading a demo account like some people waste their time doing. No, come here, open your account, watch our webinars, get trading ideas from our webinars, place these orders, make money from the profit of these orders, and make money from the bonus as well. Contact us at FX_UCAS via Telegram, and you will find the most professional, most friendly team very ready to help you with any question you may have or with your account opening process. We are here to help. We are happy to help, and we are waiting for you to contact us at, again, FX_UCAS via Telegram. So contact us and let's open this account for you today. With this, we come to the end of yet another fantastic webinar, guys. I'm very happy for the time we have been spending together recently, and I invite you to join again 21 hours from now in yet another webinar, another adventure in the market with a lot of trading ideas. So love you all. See you tomorrow. See you in 21 hours. Be there, guys, so we can make more profit. Have a great day, good trading, and good luck.